Welcome to the Smart Influencer podcast. I'm Corinne.
And I'm Christina.
And together we help digital entrepreneurs streamline their businesses, maximize revenue, and finally feel in control of their time.
Every week, we share tried and true strategies, proven systems, and expert interviews to help you grow your influence and income without the burnout. So if you're ready to get smarter about how to run your business, you are in the right place.
Before we dive in, if you love what you hear, be sure to hit subscribe so you never miss an episode. And if you find today's conversation helpful, share it with a friend who could use it too.
All right. So today, our special guest is the one, the only Corinne Schmidt. Yay!
It was a long flight, but I'm happy to be here.
A long trek in from the kitchen. So Corinne has been talking in our mastermind groups about these interesting tax, and I don't know that seems like such an oxymoron to me, interesting tax concepts that we can all be using on, for our businesses. So let's preface this by saying, first and foremost, we are by no means tax or accounting experts. We do not pretend to play one on TV. We are not one on podcasts. We are just sharing what Corinne has learned.
I will tell you exactly where to go to confirm this, and so that you can bring the information to your actual accountant or tax lawyer, so that you can check the facts. But I promise I will present it as it was presented to me with as much detail as I can provide. But this is not my area of expertise. It's just something I've learned that I'm using to help save me money. So, and it's really impactful, which is why we wanted to share it.
So definitely reach out to your professionals, your accountant, your business attorney, etc., and cross-check and verify everything to make sure it applies to you. And I think it's important to note for all of our listeners, we are based in the United States. So if you are not based in the United States, this may not apply to you.
Yes.
But you may still want to listen because you may have something in your country that you can utilize, but I doubt it.
That's right.
All right, Corinne. So you learned something very interesting.
I did.
Why don't you tell us about it?
Okay. So, before I dive into that, I'm going to talk about why, because I'll probably be doing it again, honestly. As part of my trying to tighten up my business and have more profit, right? Spend less, make more, keep more of what I make. I have gone heavy into this learning environment where I'm learning a lot about business taxes and how to save as much money as possible. And in as many ways as possible, get a deduction while keeping the money. So we all know how to get the deduction by spending the money. I'm trying to figure out how to get the deduction legally, 100% legally, but keep the money. And this is one of those ways. So the thing that we're talking about today is called the Augusta rule. And I pulled it up so that I wouldn't mislead you. It's Internal Revenue Code Section 280A. So this is actually part of the IRS tax code. You can go look it up. Internal Revenue Code Section 280A, also known as the Augusta rule. As I understand it, this came about because in Augusta, Georgia, where they hold the Masters, they don't have, because that's what they do there, and they don't have a lot of other stuff happening that requires a lot of hotel space, other times of the year. So people would come in for the Masters, but didn't have enough space to stay. And so the city wanted the residents to have an incentive to rent out their houses. You go on vacation for however long the Masters last, 2 weeks, I'm guessing, based on the Augusta rule. You open up your house and rent it out, you go on vacation for 2 weeks, and then we're going to let you keep that money and not claim it as income, to incentivize people renting out their houses. Yeah. So because they did that, it applies to everyone. So it's called the Augusta rule because from my understanding, that's where it started. But the code exists now so that anyone in the U.S. can rent out their house for up to 14 days and not claim it as income, right? You don't have to report that on your tax report at all. So Now you're wondering, well, what does that have to do with my
So,
business?
Corinne,
Yes,
how can I use this
I'm
in
glad
my
you asked,
business?
Christina. So, because as a business, you can now, as your business, rent the house from you, the person.
Mm, okay.
Now, why would you do that? How would you do
Right.
that?
Because, yeah.
Legally,
Yeah.
legally,
Because, like,
right?
I'm not deducting my home office. I'm
Right.
already deducting that.
Right. So this is separate, right? So, for example, twice a year, I have several friends that live within driving distance of me come stay at my house for a long weekend. We do Friday, Saturday, Sunday, and we do a retreat. We all work side by side and we share ideas and we work on our business. Like it is, we do this twice a year with the intention of doing work. Like we meet as bloggers to do blog work. I can rent my house that I'm already using for that from myself. So Wonder Mom Wannabe can rent it from Corinne Schmidt. And the way that you figure out, like you have to document it, right? Because if you ever get audited, like it needs to be very official. So I'm not
Yeah.
asking you to do anything shady, right? Like it has to be a thing that you actually did. I actually have people come to my house and we do this, right? Like they come and they stay. We're doing it anyway. So what I do is I create a contract between Corinne and Wonder Mom Wannabe that says that I'm going to rent this for this amount of time. This is the amount of space that I'm using. And we come up with a fair market value for that rent. And we're going to talk about that in a second. Fair market value for that rent. And then I write a check from Wonder Mom Wannabe to Corinne Schmidt.
Mm,
Corinne does not have to claim that as income. And Wonder Mom gets to write that off as a business expense, a legitimate business expense.
right.
Just
Right.
like
So
if I
it's money you weren't going to spend, but now you're just basically transferring it from business to personal.
Exactly. So I get to keep that money. I wrote it
Yeah.
off as a deduction and I got to keep the money. 100% legal. IRC Section 280A. Like, go look it up, talk to your accountant before you do any of this. But here are some of the key details. You cannot exceed 14 days. It does not
Okay.
have to be 14 days in a row, but you
Okay.
cannot go over 14 days. The minute you go to 15 days, all of it's taxable. It has to be,
Okay.
right? It has to
So be
be.
careful of that.
Yeah. And it's per house, but it has to be your personal residence. Like if you've got like a house that you use that you rent out or that you use as an Airbnb, you can't use it for there. But if you've got a vacation home, you can.
Okay.
And then those are two
Okay.
separate things. So it's not per you, the person, it's per the house. So you could do 14 days at each house. As I understand, again,
Yeah.
I don't work for the IRS. I'm not an accountant. I'm not a lawyer. This is how I understand it, and this is my reading of the rule. But like, I think if you take this to a legitimate accountant, they're going to back all of this up. So, other key pieces that you want to make sure that you do. You want to document as much as possible. So, if you are ever audited, you can confirm this, right? Like, you can have the contract, have a contract between your business and you, the person, that says what the dates are, what the rate is, and have it signed, right? And then have the paper trail. This is why I say write a check or at least do some sort of transfer where the paper, like you can actually track that
Right.
transaction. It's probably better if you can actually then also, if there are people like people that show up, right, that come to the meeting, they have to, like, there has to be some work thing that occurred, right? Like, you
Right.
can't just charge yourself for using your office because, like you said, you're writing off your office anyway as part of your thing. So there has to be a purpose for it. A retreat's a good example. Christina, we talked about it. Like, you have someone come and film at your house with you to do your videos. Like,
Hmm.
that's, you're renting your kitchen. So
So
you,
two things there, right? Like my VA coming to my house would count, right? Because
yes,
she's an outside person who doesn't normally live in my home,
right,
coming to my home to film these videos.
right, right.
Okay.
So, or any type of, if you want to get headshots done and you have it done at your home, or you meet with the person at your home,
Okay.
right? Like, and then, so what you want to do is you want to make sure that you're going apples to apples when you get the comps, right? Like when you're coming up with the rate that you're charging. So, for example, when I do a retreat, my friends are staying here. They each get their own bedroom and they have their own bathroom. So I count that almost like renting a hotel room, right? Like they're getting that
Mhm.
same amount of space. And then I'm paying for their meals while they're here. Like I feed them and provide drinks and everything. We use, because we're doing a retreat, like we use my whiteboard. Like I've got a big rolling whiteboard. As you know, I've got a big rolling whiteboard. We use the giant television screen because we'll cast to that. So I would look at local hotels that provide all of that equipment and find out what the rate is for that span of time. And that's my comp, and that's how I decide the rate that I'm charging myself.
Mhm.
So if you're doing overnight stays and you're not doing a bunch of that other stuff, it could be like you'd comp with Airbnbs.
Right.
Get a lot more bang for your buck if you can comp to hotels for meeting space. But then you want to be careful that you're doing the like actual square footage. So when we use my house, we don't actually use the basement for it. So I don't include that in the square footage of the like looking at a
Right.
hotel, what room space we'd use. Right. Like the
Right.
meeting room that we use is my dining room and family room. So that's the meeting space size that I'm
Right.
looking at. Right. So like again, like we're not trying to break the law. We're just using a code that exists. So you want it to be apples to apples. So as close as you can get. Like for you, you would probably have to look at an Airbnb unless there's a commercial kitchen that you can rent somewhere
Right.
else,
Right.
right?
Right. Right. Yeah.
So like go apples to apples. The other thing that like from where I learned this from, they do a holiday party. So if you happen to have anyone that works closely, close to you that you could bring in to have like a holiday party, that's the sort of stuff you do. If you've got a blogging friend that lives nearby, get together and
Hmm.
co-work.
Hmm.
So use as much of that 14 days as possible because you can use up to 14 days. And again, get it as a business expense, but put the money right in your pocket.
Or if you have a VA who works locally to you, bring them in and do working days, like co-working days in your space.
Right, right.
Yeah. So are there any limitations as to what business classification? Like, is this only available to S corps, LLCs, sole
Anyone.
proprietors, anyone? So I
Yeah,
think the most important thing that you've said here that I'm taking away from this is making sure you have your ducks in a row so that if you were to be audited, you would feel comfortable defending this write-off to an IRS auditor.
right, right.
Okay.
And just keep the documentation.
Yeah.
So as long as it is legitimately for work, and then whatever documentation, so if you've got someone like, let's say you've got a VA coming, keep minutes. Just have a Google Doc,
Yeah.
keep the minutes, and then store that with your tax files, right? Like,
Hmm.
so you've got the paper trail. The most important thing will be the payment documentation.
Hmm.
Like you need to,
And maybe have them put that on their invoice to you for their
right,
services that they rendered, like attended all day workday session in person on blah 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 day
right,
at blah 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 location.
right. And so that you understand how much money we're talking about, like comps for me for a meeting day for the amount of space that I'm using and the equipment that I have is $1,000 a day.
Hmm.
So if I just have someone, like if I just brought someone in to co-work with me and then we made sure that we used the dry erase board and we used the television and cast to it, like that's legitimate. And I could get $1,000 for that. That's $14,000 I could write off in business expenses if I maximize that 14 days. And that goes into Corinne's pocket that I don't have to claim as income
On your personal side.
on my personal side.
Hmm.
Which, let's be honest, I mean, maybe we've got some C corps here, but for the most part, if you are a sole proprietor, LLC is an S corp, those are all flow throughs to you, an individual person anyway. Like they're
Right.
just different levers we're pulling on the
Yeah.
tax document.
Huh. Very, very interesting. Yeah, this is definitely going on my list of things to ask my accountant for the year end, for
Yes.
sure.
So yes, by all means, double check with especially the person that does your taxes so that they understand what it is and everybody's on the same page.
Yeah.
But I mean, you can go look up the tax code. It's not even like when you know what to go look for, it's not even written in a complicated manner. Like you can like you will
Shocking.
yeah, like you will extract, I think, all of this key data from it. And like if you Google it, if you throw it in ChatGPT, like confirm it, right? Like confirm all this. It is pretty straightforward though. Like it's a very easy thing to understand. It's a very easy thing to do. The only thing that you maybe have to be a little clever with is how you're going to host legitimate work related business
Right.
at your house that's not your normal day-to-day business.
So I think the one thing we talked about previously was so I do TV segments and they actually come to my house to film. So I can use that
100%.
then as a write-off because I actually have the host and the producer and the videographer, here filming. It's an actual work event that's promoting my business.
Right.
Hmm.
Yeah.
Man, I'm just letting all that money go.
So I did ask because we're recording this end of 2025. I only just learned about it. I already hosted my two retreats.
Yeah.
So I'm taking a risk this year. I am going to backdate it because I did legitimately hold them. So but I know that for me. So I'm not saying
Right.
right, like I know that for me that if the IRS came and questioned me, I'm going to have the transaction go. I'm going to have the contract. We'll use it in years going forward.
Yeah.
But so I'm probably dancing on a line right there in terms of like I'm retrofitting it to what happened earlier in the
Hmm.
year. But definitely, if you're listening to this, make a plan for 2026. Like figure out
Yeah.
what days, like arrange a co-working session with a local friend. Have one of your VAs. Like figure out a work thing you can do that will eat up 14 days that you can legitimately use for your business, right? Be doing something that actually helps
Hmm.
your business. Like we're not just like my retreats help my business. It helps me as a person,
Yeah.
as a blogger grow.
So just for clarity also, if you do this and you're planning this, your 14 days, and you accidentally go over and you bill yourself for 15 days, it's not like they will take 14 and then not count the 15th. They just won't take any of the days.
Right.
So you need to be careful about that.
Yeah, track those 14
Yeah.
very carefully. So,
Right.
yes, by all means, go confirm this with like whoever it is that you actually trust for this type of advice because I'm not saying that should be me. It's not my wheelhouse.
Yes.
But
We
the
are
fact that
not tax
Yeah.
experts.
But the fact that I'm not tax savvy and I can understand this makes me feel like anyone can do it. So,
Yeah.
yeah.
And I did put the Augusta rule code in the show notes. So make sure you head over there and you can look it up yourself.
All
Yeah.
right.
This is awesome. This is a great resource to explore. And I think you have another one for us next week.
I
So make sure
do.
you tune in next week for another interesting way we can work with our tax code.
Yes, and I
I
hope
never
this
thought I'd be
saves you
saying that in a
lots
sentence.
of, yeah, I know. I know. But I do hope I'm not excited about taxes, but I am excited about keeping money. So I hope
Yeah.
this helps, several people, hopefully hundreds of people save lots of money on their taxes.
And if your family members, like my son, who has his own business, can do the same thing. So, I mean, like, think outside of the box if you have family members in your household that have their business.
I'm glad you mentioned that. So just for
Oh,
clarity, again, like it's 14 days total for your house,
oh, for the whole
for
house.
your house, not,
Ah,
Mhm.
good to know.
Yes, for your house,
Okay, so not for the business
not for the business.
renting the
Right.
space.
So like
It's
he can't do it for 14 days and you do it for 14
gotcha. Oh,
days.
I'm glad I brought that up.
Yeah. It's for
Okay, because I
your
was
house. That's why if
confused.
you have two houses, then you could do it twice.
One in each. Gotcha.
Okay.
Okay, so a little bit of clarification. I hope you listen till the end. That's an important nugget.
Uh,
Thank you so much, Corinne. I think this is a great thing that we can look into. I know I'm emailing my accountant today to check into this, but we'd love to hear from you too. So definitely tag us on Instagram at the Smart Influencer. Send us an email at hello@the-smart-influencer with your biggest takeaway from today, or if you think you can take advantage of this code. Like we'd love to hear what your tax preparer says.
yeah. Thank you for
Yeah.
spending time with us today. We will be back next week with another tip and
Yep.
another episode to help you grow smarter, work less, and earn more, or at least keep more money. So we'll see you then.
Bye.